$2,000 a year. That's how much extra a retired couple pays Medicare for crossing one specific income line by a single dollar. Not $1,000 in extra income. $1. The IRS calls it IRMAA, the Income-Related Monthly Adjustment Amount. Most retirees never hear about it until the surprise bill arrives, 14 months after the trigger event. In the next 10 minutes, I'll show you exactly where the brackets sit in 2026, the 2-year look-back rule that catches almost everyone, the 3 life events that let you appeal, the form that handles the appeal, and the 4 planning moves that keep you under the cliff. There's a quiet moment that arrives about a year and a half after you do something good. You sell a house, you convert some IRA money to Roth, you take a one-time pension distribution, the taxes get filed, the check clears, life moves on. Then a letter arrives. Social Security. New Medicare premium. Hundreds of dollars more per month. For the whole year. You stare at the page and try to figure out what changed. Nothing changed this year. Something changed 2 years ago. That's IRMAA. Most retirees never know the brackets exist until they cross 1. Today we fix that. 5 specific moves. Move 1. Know exactly where the brackets sit. IRMAA uses your modified adjusted gross income from 2 years ago, MEGI for short, to set your Medicare Part B and Part D premiums for the current year. For 2026, the first IRMAA cliff hits at $103,000 for a single filer, $206,000 for a married couple filing jointly. Crossed by $1, and your Part B premium jumps from $185 a month to $259. That's $900 a year extra for one person, $1,800 for a couple, plus another $200 to $400 per person on Part D. The brackets do not adjust smoothly. They are cliffs. $1 over, and the premium is the higher tier for the whole 12 months. Take Margaret. The Margaret from Move 1 of an earlier video. Margaret and her husband sold their downsized lake house in 2024. Gain on the sale, $40,000. Their MAG for the year jumped to $210,000. $4,000 above the first IRMAA cliff. The 2026 Medicare bill came in $2,400 higher for 1 year, from $4,000 of capital gains. The magic sentence to use when you call Medicare at 1-800-MEDICARE. Quote, "Please confirm my current IRMAA tier and which year's tax return determined it." End quote. Most people don't know until they ask. Move 2. The 2-year look-back rule. Medicare uses your MEGI from 2 years earlier to set your current premium. So your 2026 Medicare premium is based on your 2024 tax return. The premium for 2027 is based on 2025. Always 2 years back. Why this trap is so brutal? A one-time event, a house sale, a Roth conversion, a pension lump sum, drops your tax return into a higher bracket for 1 year. 2 years later, you pay the penalty. Many retirees forget what happened that long ago. Take a chap I sat with, Roger, engineer, retired from Boeing. Roger did a $60,000 Roth conversion in 2024 to take advantage of a low-income year. Smart move on the tax side, but the conversion counted as MEGI. His 2026 Medicare premium jumped a tier. He was furious until I showed him the look-back rule. He hadn't priced in the IRMAA cost when he ran the Roth math. The magic sentence for your CPA. Quote, "Run a 2-year IRMAA projection on any large taxable event I'm planning." End quote. 20 minutes of planning could save you thousands. Move 3. The 3 life events that let you appeal. If your income dropped because of a specific life-changing event, the Social Security Administration will use your current income to set your IRMAA, not the 2-year-old one. The form is SSA 44. The qualifying events are narrow, 8 of them. The big 3, retirement, the death of a spouse, divorce, 2 more that catch retirees off guard. A work stoppage, meaning your spouse retired even if you didn't, and the loss of a pension or annuity income. Take Eileen, 68, widow in Ohio. Her husband passed in 2024. The joint MEGI on the 2024 return was high. Her 2026 Medicare premium came in Tier 4, $396 a month above standard. Eileen filed SSA 44 with a death certificate and her current single income. Medicare dropped her back to standard premium. Yearly savings, $4,700. The magic sentence to use at the Social Security office. Quote, I want to file Form SSA 44 for a life-changing event reduction in IRMAA. End quote. They handle it in person or by mail. The form takes 15 minutes. Move 4. The 4 planning moves that keep you under the cliff. 1. Spread large taxable events across multiple years. Selling an investment property, doing a Roth conversion, taking a pension lump sum. If the event would push you over an IRMAA tier, break it into 2 or 3 years instead of 1. 2. Use qualified charitable distributions if you're 70 and a half or older. QCDs from your IRA go straight to charity and never appear in your Maggie. That's a future video. 3. Time your Social Security claiming with IRMAA in mind. If you're delaying Social Security and pulling from your IRA in the gap years, you control your Majesty by what you withdraw. 4. Move tax-inefficient income into a Roth before you start Medicare. Roth withdrawals don't count toward Maggie for IRMAA. Traditional IRA withdrawals do. The magic sentence for your financial advisor. Quote, build a multi-year Maggie plan that keeps me at least $5,000 below the next IRMAA cliff every year. End quote. Move 5. The annual review you should never skip. IRMAA brackets change every year for inflation. Your income changes, your plan changes. Once a year, usually in the fall, before the next year's Medicare letter arrives, sit down with your tax preparer or advisor and run the numbers. What to check? Are you about to cross a bracket on this year's return? Did you have any life-changing events that might justify an SSA 44? Are next year's income projections likely to hit a higher tier? 5 minutes of preparation can save you thousands. You've worked decades for this Medicare coverage. Don't let an income surprise from 2 years ago raise your premium for an entire year. 5 moves. Know the brackets. Understand the 2-year look back. File SSA 44 if you qualify. Plan to stay under the cliff. Review every fall. If even one of these saved you $1, hit subscribe. New videos every Tuesday and Friday. In the comments, tell me whether you'd already heard of IRMAA. I read everyone. I'll see you in the next one.